Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. Well guys, the gold stands among the currencies and among the other assets that probably will wait for more clarity from the Fed Reserve. So we have spoken about it yesterday, and now we could say probably the same, because you know that in fact the driving factor on the gold market is not the physical demand, because the physical demand stands almost flat during the recent 10 years and stands more or less around 5,000 tons per year with some fluctuations. But the most driving factor on the gold market, if we will drop out the geopolitical tensions, is inflation. And currently market stands at the same point that in fact some sort of the culmination concerning the possible inflation numbers and the Fed Reserve comments, and not everybody investor, and maybe we could say even nobody, would like to take unnecessary risk right now in the gold market. Yes, we see that the SPDR fund reports on the new inflow. Yesterday it was approximately 2.5 tons in the storage of the SPDR fund, and in general with the recent couple of trading sessions the storage was increased for approximately 5 tons, and we see that investors start to put money in this fund, and in general the investors shows the more interest in the gold market right now. But as I said, the drastic moment, the crucial point, will come with assessment of the Fed Reserve on the current situation and clarification of the following policy of the Fed Reserve in terms of the rate. If Fed Reserve will change the rhetoric and will hint will prompt on the possible more hawkish policy, and that the rate could be increased sooner rather than later. In this case, this will make negative impact on the gold market. As you know that the gold market is negatively react on the growing interest rate. That's why, despite the recent action on the gold market, you can see really a volatile action within the recent 2-3 weeks. Hardly the new drastic and significant motion will start before the clarification will follow from the Fed Reserve. That's what we could tell about the daily chart. On intraday charts, yes, we could say some action. Shortly speaking, if we will take a look at the 4-hour time frame chart, we see that our assumption on the possible butterfly was failed, so market has not formed the butterfly, and we could say it probably has shifted to form the right shoulder of this pattern right now directly. So we could see that market stands right now in a forming of the right shoulder of this head and shoulders pattern. At the same time, guys, on the daily chart we have this bullish stop grabber pattern that suggests the taking out of this top. We can't say that it's impossible, despite that we now stand in the forming of the head and shoulders, and despite the moments that we have discussed yesterday, some bearish moments that point on the possible retracement to the 1295 13 even area. That seems logical right now. But at the same time, technically, it's very difficult to take the position based on this grabber, because if you have missed to take the long position here, right now it's difficult to do, because here we still have the resistance, and the target, this minimum target of this grabber is taken out of these highs, stands very close to the current market. and if you place stop below the invalidation point of the grabber, you will not get acceptable and promising risk-reward ratio. This will be almost 1-to-1 or even worse. That's why I do not see what could be done much on the long side of the market right now. At the same time, existing of the still valid stop grabber pattern makes difficult to take the short position, because if you even expect to get the head and shoulders, taking the short position right now, by this action you will stand against this pattern that theoretically is still valid and really could lead market right to here. So you can see that this is really noise, short-term noise here with these small positions in one or other direction. It will not change the overall daily picture, but this could be interesting maybe for the intraday traders. That's why currently I do not see really attractive situations. So on the hourly chart, on the 4-hour time frame chart, until this low still valid, market has chance to take out of these highs and erase the head and shoulders. At the same time, if you take a look at the hourly chart, you'll see that market right now stands at the crucial area for the right shoulder. So if market will not start appearing of right shoulder, creating a right shoulder right here, this could put under question the overall head and shoulders pattern. But market right now has the reason to form the right shoulder, because you can see this A, B, C bottom pattern. Market just has completed this with this spike up, this ABCD pattern, and piercing of this level could be just due attempt to complete the ABCD pattern. That has happened. Now market stands in the so-called, we could call this agreement or something of that sort. At least it has no more reasons to continue move higher if the head and shoulders pattern is still in play. And right now we should see the move to the downside if we still believe that this head and shoulders pattern could be formed. But again, as I said, to take the short position here is risky, because you have still valid bullish grabber on daily chart. That's why I can't call you to take any position right now, because taking long is not very interesting and not attractive, because mostly due to the balance between the potential profit and potential risk. You can see that here the risk even greater. Taking the short position is a bit risky currently. Maybe if market will complete the head and shoulders pattern, in this case we could try to do this, but in this case of course the potential for profit will be very small. You could try to really take some sort of the pain or gain position with the hope that market will continue move lower here and with placing stop somewhere slightly above this ABCD target. Because if market will continue move high, it will mean that probably this setup will fail and market really continue move with this grabber pattern. But I just can't call you and can't recommend this, because this is corresponds to significant risk. That choice is up to you, but as I said, the cold market probably will wait for the clarity, for the more transparency from the Fed before any significant action will here. This intraday really noise is could be traded, but it's not really very attractive. So guys, that's our current view on the gold market. Let's see what will happen. Maybe some clarification will come already on the next week when the data on inflation will be released on the United States economy. Maybe here we already will get some more clarity and investors will start the motion in some direction. But right now, probably market will remain choppy here. All that we could suggest right now is that probably retracement still could happen to 1295, 13 even area, but it's really not significant action in the current situation. So let's see what will happen, because I do not see really much what could be done right now in the gold market.